Hey, hi, this is Krubakaran Rajendran. Welcome to Trading with Grow channel. In this video, I'm going to talk about Nifty intraday trading strategy, where I'll be explaining an intraday trading strategy with options, and also I'll be explaining a trading strategy with futures. Where, with respect to options, the strategy will be focusing on non-directional basis, where as long as Nifty moves in a very tight range, it makes very good profits. Beyond that, if Nifty starts trending, probably it will get from non-directional to a directional system. In addition to that, I'll explain about a trend following system with using Nifty futures. So when you mix both these strategies together, it gives you a very good profit with a very minimal drawdown. So let us start with explaining what is the rules of these strategies. So first, let me explain about the rules of option trading strategy. See, with respect to options intraday trading strategy, it is always wise to ignore the first hour volatility. Between 9:15 to 10:15, market could be highly volatile, and specifically India wicks and all these high V's of option premiums could highly fluctuate. So when you try to trade as soon as the market opens using options, most of the time your stop loss might get hit. So in order to avoid that, with option trading strategy, we are going to start the trade from 10:15. So we'll start the trade from 10:15 and we'll hold it till 3:50. And the second thing is, we are not going to use stop loss based on the premiums. Instead, we will use the stop loss based on underlying. Only when Nifty spot moves certain percentage, then only we will exit our option position. Because with huge volatility that is going to play in the markets, even a small movement in option prices could hit your stop loss if you use your stop loss based on premium. Say suppose if your stop entry premium is 100 rupees, so the option strike price is 100 rupees, you have entered in it, and if you kept a stop loss of 25%, then it is the moment it hits 125 rupees, you have to exit it. But these kind of movement from 100 to 125, 100 to 10, 15 rupees can easily happen. So whenever market slightly makes a small move, these options tend to spike faster and hit your stop loss and again come back to the same position. In order to avoid this, we will be using a stop loss based on the underlying. Only when Nifty spots move certain percentage, only then we will exit our option position. So this way the stop loss would not hit very frequently and you will be avoiding a lot of spikes. So I've used a third-party platform called Algotest to backtest it. So I've selected the instrument as Nifty and I've selected the underlying from cash. And also if you see the entry time, I've mentioned as 10:15 a.m. and the exit time I've mentioned as 3:15 p.m. And I've selected this as an intraday strategy. And with respect to stop loss, I've mentioned the checkbox which says that trial SL to break even, which means that if stop loss is hit on the call side, then put option stop loss will be moved to cost price. Say suppose you are entering as at 100 rupees on call and 100 rupees on put, and keeping a stop loss of 125 on the call side and 125 on the put side. Now if market moves up and your call options stop loss is hit, then what happens, instead of keeping 125 as a stop loss with put, it will be changed to 100, where the stop loss will be moved to entry price. So we are moving the stop loss to cost price when the other strike hits the stop loss. This way you are controlling the risk to a greater extent and you are not losing greater amount of money if the market reverses. So these are the rules of the strategy, where you are able to see two different boxes, box 1 and box 2, which is nothing but the call option rules and the put option rules. So I've selected one lot and I've mentioned the position as sell position because this is an option selling system. And the strike price, I have selected call first, and this is going to be on weekly expiry, and this is going to be on at the money option. And stop loss, as you could see, I have mentioned 0.5%, which is not on the premium, it is on the underlying. Say suppose if Nifty is trading around 20,000 level, so 0.5% on this 20,000 level, which is 100 points. So if Nifty moves from 20,000 to 20,100 on the upside, then our call option strike has to be closed. Similarly, for put option, the same rules, where the stop loss is 0.5% on the underlying, where say suppose if Nifty is trading around 20,000, from there if it moves down 0.5%, which is if it moves down 100 points. So if Nifty moves to 19,900 levels, then put option will be closed. So this is the stop loss criteria, and we will be entering at 10:15 as mentioned earlier. So if we apply these rules, what would be the overall returns it would make? Let us see. So this is the overall returns from 2019 to till date. Since the date the weekly options was introduced, from that time to till date, the green line that you see is the actual P&L from this strategy. So it has almost made approximately 3 lakhs of overall profits from 2019 to 2023 if you apply these rules and trade every day with Nifty weekly options. So this is the overall drawdown of the strategy, where drawdown is the maximum loss that you could face if you trade this strategy. And the mostly, if you could see, from 2019 to till date, the maximum loss or maximum drawdown did not exceed beyond 20,000. So it is less than 20,000 is what the maximum drawdown has been. And this is the overall yearly and monthly returns. So from 2019 it made almost 55,000 returns with just 6,000 rupees of drawdown. 2020 it made almost 65,000 rupees of profit. So all this profit that you are seeing is for only one lot. And for 2020 21, both the years it was consistently, it was good. 2020 21 22, all 3 years it was good. And this year it was almost flat, it made around 10,000 rupees of profits. And most of the time the drawdown is less than 20,000 only. And these monthly returns, if you see, only few months it ended up in negative, and most of the months it ended up in positive zone. So this is the overall performance metrics. The overall profit is 2.75 lakhs with almost 1,200 trades from 2019 to 2023, and the overall winning accuracy is approximately 60%, and the average profit that you make is around 1,000 rupees, and average loss you make is around 990 rupees, and maximum profit that you could make in a single trade is 7,600. Maximum loss that you could face in a single trade is only 3,600. So you are almost making 2 times of your risk with respect to maximum profit and maximum loss. So these are the overall metrics for this option selling system. So for this option selling system, I'll remind you again, all you have to do is short at the money call option and at the money put option at 10:15 and close it at 3:15. The stop loss has to be 0.5% on the underlying. Only when Nifty moves from 10:15, if it moves 0.5% on the upside, close the call option. If it moves 0.5% on the downside, close the put option. This is the rules. In case the call option stop loss is hit, then put option, what you have to do is you have to move your stop loss to the entry price. So whatever the entry price at 10:15, that has to be your new stop loss if the other leg stop loss is hit. So if you do this and trade every single day with respect to Nifty ATM options with one lot, these were the profits that you could make with respect to option selling system. So this system is really diversified, because as long as Nifty trades between this 0.5 range, where if Nifty is in a range bound of 100 points move, it gives you a good profit. If it starts beyond this 0.5% and moves in a one-sided direction, then one of your stop loss is going to get hit, and the other one would continue to decay and would end up in minor profit or minor loss. So this way overall no drawdown is under control and you could make decent returns. So this is the overall gist of the option selling system. So let us get started with the futures system. What are the rules of it and how much profit the futures trading intraday trading system could give you with Nifty. See, for futures, we are going to focus on the first 30 minutes because we are wanted to capture the direction of the market. So when the first 30 minutes range is formed and once that range is broken, market might give you a specific directional move. So you observe overall range from 9:15 to 9:45. This 30 minutes range you watch and see how where the high and low is formed. And after 9:45, if the market starts breaking the range high, then you will just buy the futures of Nifty. If the market starts breaking the range low, which is 9:15 to 9:45, whatever the high and low price, if that low price is broken, you will go short with Nifty futures. So it is blindly on Nifty futures. So for Nifty futures, there is no weekly options, only monthly options, and there is no strikes like ATM and all. So only one Nifty futures, the current month Nifty futures, you are going to trade with it. So if you apply these rules, then what would be the stop loss? Say suppose if this the overall range that has been formed from 9:15 to 9:45, if the range is say suppose 40,000 on the high side and 39,500 on the low side, so you have a 500 points of range. So if Nifty breaks this 40,000 levels and moves up, you just buy it with the stop loss of 39,500, the range low. Similarly, if Nifty starts going down and goes below 39,500, you short Nifty futures and your stop loss has to be on the high side, which is nothing but 40,000 level. So if that 40,000 level, after hitting the 39,500 level, if Nifty goes down, your short is triggered, and for that the stop loss has to be the range high, which is nothing but that 40,000 level. So this way your stop loss is not going to hit very frequently. Only when the range is broken only the stop loss is going to hit, and when the range is broken on the other side and if market reverses, it means that the direction has failed out. So you just have to come out with the minimal stop loss. So if you apply this specific rules, what would be the overall returns? Let us see that. So as I mentioned earlier, the start time is 9:15, end time is 9:45. You are waiting for the first 30 minutes range to be formed, and you have to initiate the buy order. You have to buy the Nifty futures when this range high is crossed. So you just observe from 9:15 to 9:45 what is the high level. If that high level is crossed, you just buy Nifty futures. And for shorting Nifty futures, the rules are same. You just observe from 9:15 to 9:45 what is the high and low value. And if that low value is crossed, you just have to short Nifty futures with the range high as the stop loss. So if you do this, this is the overall returns where it has made approximately 4 lakhs of overall returns from 2019 to 2023. So this is relatively much higher than our option trading system because this is a directional system. So as long as Nifty moves in a single direction, this can give you enormous profit. And if the market is in range bound, this might not give you a good profit. It can give you a minor loss, but your option selling system can give you a good profit. That is why we are combining both the strategies together to make higher returns. So let us see what would be the overall drawdown of this strategy. So this is the overall drawdown where the drawdown is slightly higher than the options, since we are dealing with futures relatively, which is having a higher risk than options because of one delta move, whereas with options the ATM is just 0.5 delta. So here the overall drawdown is approximately 60,000 rupees for one lot. So this is the overall returns of this future strategy from 2019 to 2023. 2019 it was phenomenal where it gave you 1 lakh profits. So from 2019 to 2021 for consecutive 3 years, it gave you almost more than a lakh profit for one lot with less than 40,000 rupees of overall drawdown. And 2022 it gave around 51,000 of profits, and 2023 it gave around 9,600 rupees of overall profits, approximately with 59,630 as the overall drawdown. So this is the performance metrics of future system where it made almost 3.91 lakhs of overall profits. Here, if you closely observe, the winning accuracy is only 39%. So approximately 39.27 is the overall winning accuracy, which means that if there are 10 trades that you take, only 4 trades is going to be in profits. The rest of the 6 trades might hit stop loss or might end up in negative loss. But the risk to reward ratio is 2 times higher. The average profit that you make is almost 4,200 rupees. Average loss on a losing trade is only 2,200 rupees. So with 1:2 risk reward ratio, even with 40% accuracy, you can still end up making a higher profits in the long run. So that is why we say with trend following systems like this, winning accuracy doesn't matter. How much you make when you're right and how much you lose when you're wrong, that matters in the long run. So with futures trading strategy, this is the overall performance metrics. So when you club this option selling system as well as with respect to future selling system, the overall returns that you can you could make could be much higher, and the overall drawdown could also be minimal. So if you're planning to use this kind of system, I would advise you to explore even further to modify any specific stop loss. So you say suppose if I'm using a 0.5% stop loss on the underlying, you could try using 0.25% and backtest it and see how the overall returns could be. Or you can change from 0.5% to 1% on the underlying and see how the overall returns could be. Similarly, with respect to the future system, I have used 9:15 to 9:30. You can use from 9:15 to 10:15, the 1 hour ranges also. So try to play around with these two elements where with option selling, change the stop loss on underlying. For future system, try to change the overall timing from 9:15 to 10:15 or 9:45 or 10 o'clock, and try to create a range and try to create a trading strategy from that. What I've explained is kind of a vanilla system, but that gives you an option to explore even further and refine the system altogether. So I hope you found this video really helpful. I'll see you guys next week with another video.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing. Please read the risk disclosure documents carefully before investing in equity shares, derivatives, mutual fund, and or other instruments traded on the stock exchanges.